All of them beat, and to your point, I wouldn't call them high-quality beats. So you had Citi, which beat, but they had a TradeWeb IPO that was something like $350 million extra for them. JP, we talk about $750 million flowing directly to their bottom line they wouldn't have had if this tax thing didn't happen. So, with the exception of perhaps Goldman Sachs, and Goldman Sachs beat estimates on their actual businesses. They actually had about $200 million more in equities trading results than people had figured. So I would call that the lone exception.
The old days, Goldman would beat by $2, $3 every time. Remember that?
Yeah.
You miss those days?
Yeah, absolutely.
Those are the prop trading days.
Those are the prop trading days. Was Goldman the outstanding report today?
I think they, definitely showed some better moxie in that equities line, and it was just enough of a beat. It was a cleaner number than I guess the rest of them. And I think the rest of it comes down to guidance and forward and estimates. How many times are we going to get a cut? What's the ultimate number, and what's growth going to look like? And
tell me again why. So you think that loan growth near term can offset declining rates that aren't going in banks' favor?
Well,
and tell me about it because of the SALT?
Well, I think, first of all, in the big banks, I think you've seen some of that, right? You've seen enough loan growth that NIMs come down, but earnings estimates, really haven't been impacted dramatically. If you go to states where people are migrating to, Tennessee, Florida, Texas, zero state taxes, growth is better. And, housing has a chance to be better there. Developers need to build more housing stock. There's not enough. So, yeah, growth is better.
But just you touch on Wells Fargo. It turned around. It's the reputational issues. Right. Where are they? What inning is this? And I don't mean like Little League. It's like a 9.
They're still in the fourth inning. So
fourth inning.
The CEO search, they don't have a permanent CEO.
Right.
And so it's possible that their interim CEO, Alan Parker, becomes a permanent CEO. From the onset, they said they want an external candidate. It's proven harder to actually get that external candidate. So you'll always have this kind of cloud of uncertainty until they have a CEO, which is understandable. Expenses, there's an issue there. Net interest income, they seem to be underperforming there. And rates haven't even been cut yet. So they're already underperforming on this key business line. What happens when the Fed actually does cut rates?